An epic crash is coming. Prepare now. Hey guys, Britt here. Welcome to End Times Bible Prophecy. An epic crash in the U.S. stock market is coming. That's what the data and past history tells us. Now, history reveals 100% of the time we see the data points we see right now. It ends in tears for investors. Meaning, unless things are different through all of history, this is the one time that it's different in all of history, then we're headed for an extreme bear market in the U.S. stock market. So in today's video, we're going to look at what the current data tells us, what history says is going to happen next, and most important, how this is a fantastic opportunity that we need to be preparing for to share the gospel of Jesus Christ. But first, let's take a look at this right here. So this is over on brittgillette.substack.com. Yesterday, we had this video come out about a warning of millions of people already being deceived and are currently being deceived. So this is a video I did with Scott Townsend of IamAWatchman.substack. You might know Scott as well from the prophecy roundtables that we do on a monthly basis. This is the first interview I've ever done on the channel before, and I believe it may be one of the most important videos that I've ever done, and Scott feels the same way. So guys, we talked about AI Companions, his 4-part AI Companion series. If you hadn't seen that, I highly recommend that. AI in general, and some of the pitfalls that we're facing. There are huge pitfalls spiritually, emotionally, mentally that people need to be aware of. We need to be warning our friends and family about these things. So make sure to head over. This is an exclusive Substack video. You're only going to find this over at brittgillette.substack.com. It's not on the other platforms. Maybe we'll see if they go on other platforms in the future, but for right now, this is only over at Substack. There's a link in the description if you're watching this on a platform other than Substack. I'll also try to pin a link to this at the top of the comments on those other platforms. But make sure to check this out because you need to be warning the people around you and you need to be aware yourself so that you are not deceived by the things we're seeing happen with AI. So guys, make sure to head over to brittgillette.substack.com and check that out. Now, we're on the cusp of an enormous and epic stock market crash. We've been talking about this for some time. So back in January, I put out this article. This is the biggest speculative bubble since 1929. It will end in similar fashion. So guys, this, for those who aren't familiar, we had a big stock market crash in 1929. Really the biggest stock market crash in U.S. history, and it led into the Great Depression. And I believe we're on the brink of seeing something again just like that happen. And back then I wrote this. I said an epic collapse is coming and it's going to be big. Exactly when it happens, next week, next month, next year, I don't know. But I do know this. All the other times we've seen what we see now, it turned out badly. And in that, I laid out these different metrics, such as the Buffett indicator. This is what Warren Buffett uses himself to try to gauge a value of, or an idea of how overvalued or undervalued the stock market may be. And then we have the S&P 500 price to sales ratio, which historically also gives us an indication of how overvalued or undervalued the market as a whole is. And these were at extreme levels back in January when this came out, January 21st. They're at higher levels now. So let's take a look at this right here. Again, this is the Buffett indicator. So this is taking the total value of the stock market, the 5,000 largest stocks in the United States, the Wilshire 5,000, and it gives us it divides that by GDP, the total output, the gross domestic product, or the total output of the U.S. economy. And according to Warren Buffett, fair value is about 60% on that ratio. Back in January, when we wrote that article, it was 204.2%. As of right now, we're at 208.8. This is an all-time high. This chart only goes back to the 1970s, but you can see here, this was the dot-com bubble that burst. It didn't even approach 150% at that point. You can go all the way back to 1929. I believe this was about 139%, something like that. We are at unprecedented levels. We've never been here before. And history tells us this is going to revert back to this mean, which means either the economy has to, triple in size overnight, or the stock market has to go down substantially. And we'll look at how substantially as we go through more of this. But we also have this. This is the S&P 500 price to sales ratio. So this gives us a gauge of how overvalued a company is based on what it's trading for versus the amount of sales that are coming in. And we can see this chart only goes back about 20 or so years. But you want to see a ratio that's in the 1 to 1.5 range or lower would be undervalued. But this was 3.07% back in January. Now it's at 3.18. So this is at a level, an extreme overvaluation we have never seen before in history. Again, if this chart went all the way back to 1929, we would not see this either. So guys, we are at extreme overvaluation levels. We also have this right here. So this is from Seeking Alpha. Came out a few days ago. It says sell the S&P 500. Not a recommendation. I'm just saying that's what they say. But this has, it talks about some of the same overvaluation metrics. They give the Buffett indicator being at an all-time high. But then it talks about equity concentration, and it says that equity concentration in the S&P 500 is increased rapidly to record levels. The graph below illustrates the trend in the equity concentration of the top 10 companies in the index. Again, we talked about this back in that January article. Pin a link to that at the top of the comments as well. But this is a sign of extreme overvaluations. So we've seen this in the past. Here right now, the top 10 stocks in the S&P 500 comprise 39% of the value of the S&P 500. So again, when people say, well, my retirement account is buying shares in the S&P 500, I'm being diversified across 500 different companies. No, 39% of what you're buying is concentrated into 10 companies, 10 extremely overvalued companies that are at unprecedented levels of overvaluation. As we talked about at that time, it's just off the charts how overvalued some of these things are. Look at where we were during the dot-com bubble. You know, we didn't even hit 30% back then, much less 39%. If you go back and you look at charts of the U.S. stock market back in 1929, I think this hit peaks around 36 to 37% in that range, but it did not hit 39%. So this, again, is an all-time high. We've never seen an extreme overvaluations the way we see right now. We also haven't seen this before. So this is from Bar Chart. It says investors are now buying stocks on margin at levels never seen before in history. So again, what does that mean? Well, that means that people are borrowing cash in order to invest in the stock market. And this is exactly what we saw in the lead up to the great crash in 1929. We saw people who were forced to sell. They get what's called a margin call, which means they have to pay back the loan in total, or they have to put up more cash. Oftentimes people don't have that cash because they've invested everything they have as well as what they don't have, which is why they've borrowed. So the broker forces them to sell in order to cover the amount that they've borrowed. Well, what happens when multiple millions of people get margin calls at the same time and they're all selling at the same time? Then you see a crash, and that crash facilitates more margin calls, and it cascades downward. So let's blow this chart up and we can see just where we are right now, where we are before the last crash back during the great financial crisis, where we were before the dot-com bubble. This is really just off the charts, literally off the charts. This wouldn't have fit on one of those charts where we're at right now. Again, this may be somewhat misleading because this is giving us dollar figures, so we don't know what those dollar figures were in 1929 in real terms today. But we also didn't see this in 1929. So this is from Global Markets Investor. It says S&P 500 call options volume has skyrocketed. Daily notional call option trading, and I'll explain this in just a second, has reached almost $1.2 trillion for the first time. Over 50% of these options expire the same day and nearly 80% within 1 week. Short-term speculation in the market has never been greater. And we can see how this was really not even measurable 20 years ago and how it's just gone off the charts today. Now, what does this mean? Now, a call option is something that you can buy. We call it a derivative. So you buy this option and it gives you the ability or the option to buy a share of stock at a certain price called the strike price. So let's say that Coca-Cola stock is $50. I think it's going to go to $60. And so I buy a call option that gives me the ability to buy it for $52, right? And so if it goes from 50 to 60, well, I can exercise this option, buy it at 52, sell it at 60, pocket the $8 difference, but I'm paying a fraction of the cost for that option I would to buy the stock as a whole. So it can magnify my returns, but it can also magnify the losses, right, if things go to the other extreme. And so this is really a sign of massive speculation in the markets, not investing. You're not investing when you're gambling when you decide that you're going to speculate that something's going to go up in 1 day or 1 week, and you're trying to amplify your returns using, this is another form of leverage, just like we saw back here with the margin levels. So it's borrowing money or leveraging options. Some of that borrowed money is going to buy these options, which makes it even worse. So this is setting us up for when all of this reverses, it's setting us up possibly for the greatest margin call in global history. And we see this as well. So we see this from Husman Funds. John Husman's a market commentator. He writes about valuation in the markets, and he has his own proprietary system for valuing the market as a whole. And here he has his most reliable valuation measure. He says it presently remains beyond the 1929, 2000, or even 2022 extremes. Indeed, the current level is less than 1% from the most extreme level in U.S. history, which was set in February of this year. Well, again, this data was drawn June 10th, so this article is about a month old. Well, we're at new all-time highs. This metric is almost certainly higher than it was in February, which makes it the all-time high again. This is 1929 back here, if you can see the date. So this chart goes back almost 100 years. This is 1929. This is the 2000 dot-com mania. This is 3 years ago when we were warning about this and we saw it go down. Oh, now it's going back up to new highs. Some people might say, well, that means there was never any problem with extreme overvaluation. No, it just means now the problem's worse when the bubble bursts and it collapses, which will happen. History tells us over and over again this will happen. It doesn't mean that 5 years from now the market isn't higher than it is today, but what's going to happen in the meantime? We don't know. It could be a very significant downturn. So here he has, this is a plot chart he does of what your expected returns would be if you bought into the market today over a 10-year period. Right now, this is at the extreme worst returns you would ever get in history. You would get negative 6% should be your expected return annually for 10 years if you were to invest in the market right now. So think for a moment about what that means. But that means, he says here, I believe, one would need the S&P to lose 72% of its value to reach a run-of-the-mill valuation norm. He says that's not a forecast, but it's a risk to consider. In other words, we don't know what's going to happen in the market next week, next month, next year, but history and data tells us you're taking a huge risk investing new money in the market right now, because just to be at normal valuation levels, it would have to lose 72% of its value. To put that in perspective, you invest $1, you end up with 32 cents or 28 cents. I'm sorry, I can't do my math. You invest $1, you're left with 28 cents. So guys, this is telling us things are set up for disaster, frankly. So, and here we have this article that tells us how the S&P 500's performed during major market crashes. So during COVID, we saw a 34% drop from the peak to the trough. In 1987, that was Black Monday, we saw a 29% drop. Great financial crisis, we saw a 57% drop. So for those that can remember that, if you've got a long-term time horizon, probably maybe that was beneficial. But if you're about to retire or in retirement and heavily invested in the market, this is devastating. Dot-com bubble, 49% drop, and that was worse for those who were invested in the NASDAQ. I believe that was an 80% drop. Then we see the Nixon shock oil, OPEC oil embargo in the 70s, a 48% drop, and of course, the Great Depression, 1929, Black Tuesday, an 86% drop. And again, this doesn't happen overnight. This happens over a period of, in the case of the Great Depression, it was 3 years, I believe, until we saw it hit bottom. Guys, we're set up to see something similar happen right now. And we've been talking about it. I've been pointing out this chart right here for several months right now. People should ignore this at their own risk. The Bible tells us if we see a prudent person foresees danger coming and takes action, a foolish person pays the consequences. So those who are hearing this, who are aware of this and say, whatever, I don't care, be prepared to reap to reap what you sow, I guess is what I should say. So this is the largest daily percentage gains and losses in S&P 500 history. And it's important to focus on those in this case, because we'll hear in the media, well, today the Dow had its biggest point gain ever, its biggest point loss ever. Well, in percentage terms, it may not even rank in the top 100 when they say that, because over time, the market's gone up over long periods of time. So back in the Great Depression days, you're looking at a Dow that was in the triple digits. And now it's in the, 30, 40, 50,000, not 100 like it was during then. So a 1 point drop back then when it's 100 was 1% drop. Well, now, a 1% drop is 500 points, right? So it's You need to look at percentage change. And when we look at the percentage change, we'll note that the biggest, all 20, the entire top 20, the biggest percentage down days are associated with these crashes that we just looked at right here. Every single one of them. We've got Black Monday, 1987, the Great Depression, 1929. We've got the COVID crash. We've got more Great Depression. We've got COVID crash, more Great Depression, Great Financial Crisis right there. Great Depression, Great Financial Crisis, Great Depression, Black Monday, 1987. All these are Great Depression. Here's Great Financial Crisis, COVID crash, and Great Depression. So all 20. Well, the same is true on these up days. And most people think, well, it was the best up day ever. Isn't that great? Well, no, because all of these are associated with those same time periods. Because when you have a crash, you have high levels of volatility, big up days, big down days. And so we're seeing these same things. And one of them is the reason when you have a crash, when you have these margin calls and everyone's forced to sell, some people shorted the market, which means they sold shares with the intent of buying them back at a lower price and pocketing the difference. And then they get margin calls or they take profits on the way down, and you end up having these big up days where people are either selling they're buying back in to take their profits, or they're being forced to buy back in because it's a big percentage up day, and they borrowed in order to short. So you see these high levels of volatility. Again, all of these associated with these time periods. Great Depression takes the top 4 spots, Great Financial Crisis 5 and 6, then more Great Depression, COVID, 1987, Black Monday crash, and then Great Depression all the way down the rest of the list, except for this one right here. We had tied for the 8th biggest up day in history back on April 9th. Is this an outlier? Because there's no corresponding 2025 day on this side, and I would add yet. Because history tells us this is coming. History tells us we're set up for a major market crash, an epic stock market crash. Beware. Again, the Bible tells us a prudent person foresees danger and takes precautions. And so does that mean we should sell everything and run for the hills if you got a retirement account invested in markets? No. But we should be diversified. So if you're all in the stock market for your retirement account, you're setting yourself up for big trouble. You want to be diversified, as the Bible teaches us in Ecclesiastes chapter 11, verses 1 through 2. Diversify because you do not know what risks lie ahead, is what it tells us. Divide your investments among many places because you do not know what risks lie ahead. So we need to be preparing for this now. Hopefully you've been preparing for this. But more importantly than retirement or anything like that, we need to be preparing by making sure we know Jesus Christ. Now, Jesus has this to say. This is in Matthew chapter 7, verses 24 through 27. He says, "Anyone who listens to my teaching and follows it is wise, like a person who builds a house on solid rock. Though the rain comes in torrents and the flood waters rise and the winds beat against the house, it won't collapse because it is built on bedrock. But anyone who hears my teaching and doesn't obey it is foolish, like a person who builds a house on sand. When the rains and floods come and the winds beat against that house, it will collapse with a mighty crash." So guys, we can look at this as well. Those who are placing their hope in Christ and Christ alone have built their houses upon the rock. All these other people that have placed their faith in the things of this world, whether it's the stock market or a retirement account or their career or whatever it may be, anything other than Christ, They've built their lives on shifting sand. The storms are coming. Major storms lie ahead. Major trouble lies ahead. And those people are going to see their lives turned upside down. We need to be prepared to guide them to the safety of the solid rock of Jesus Christ. We read this in John chapter 14, verse 27. Jesus says, I'm leaving you with a gift, peace of mind and heart. And the peace I give is a gift the world cannot give. So don't be troubled or afraid. We don't need to be troubled or afraid about what we see coming, whether we have to endure this or not. I don't know if the rapture occurs before this market crash does or not, but we don't need to be troubled about this. Jesus has overcome the world. We can have a peace that surpasses all understanding, even in the midst of all of this turmoil. And we need to be exhibiting that in the midst of chaos, so that others can see by our example, why do you have peace? I don't have peace. I want that peace you have. They'll come and they'll ask you about it. And you need to be prepared to give an account for why your hope is in Jesus Christ. We also read this in Philippians chapter 4, verses 6 through 7. It says, don't worry about anything. Instead, pray about everything. Tell God what you need and thank Him for all He has done. Then you will experience God's peace, which exceeds anything we can understand. His peace will guard your hearts and minds as you live in Christ Jesus. As if you need peace, if you're filled with worry, if you're demoralized, or whatever, if you just feel anxiety or worry, come read the Word of God. Read these verses right here in Philippians chapter 4, verses 6 through 7. Focus on Jesus Christ. Pray. Tell God what you need. Be grateful. Thank Him for all He's done. God will give you peace through this, and He will strengthen you. And we need to be strong. We need to be standing firm on the solid rock of Jesus Christ, preparing to point others to Jesus Christ, the immovable rock, that they too can stand on in the midst of all of this chaos. Guys, this is the best opportunity that probably we've ever had in our lives, collectively, to share the gospel. It's coming up. And there's so many different opportunities. Again, we've pointed out with central bank digital currency coming. If you see somebody spending cash, tell them, don't get used to that. Well, why? And then you can tell them what's coming, what the book of Revelation foretold almost 2,000 years ago. Use the signs we see today, the nation of Israel back in the land. For 93% of Christian history, there was no nation state of Israel. It did not exist. Today it does. There's so many different signs we can point out to other people and tell them, share with them about the truth of the Bible, the reliance we can have on God's Word, and the reliance we can have on Jesus Christ, the hope we can have in Him, that He will give a peace that surpasses all understanding. So make sure that you're praying and that you are ready to share with others, because, guys, trouble lies ahead for the world. And we need to be able to point others to Jesus Christ. So let me know what you think. Leave your comments below. Make sure to check out that video again with Scott Townsend. This is a very, very important video. Quite possibly the most important that either one of us has ever done. Again, you can find a link to that in the description. I'll try to pin a link to the top of the comments as well. Check that out, because you need to be warning the people around you of the potential dangers of interacting with AI. Again, we answer, should Christians even interact with AI? We answer that question. AI, you go and watch this and find out what our conclusion is. But guys, we need to be warning others of the potential pitfalls with AI. So let me know what you think. Leave your comments below. God willing, I will see you on Monday.